This is your Wall Street wake-up call. The three major U.S. stock indexes closing at record highs on Monday. For more, I'm joined now by Maximilian Kunkel, a cross-asset strategist at UBS Wealth Management based in Zurich. So, Maximilian, this is the second time we saw all these indexes close at a record high in less than a week. Do you think the market is getting a little bit ahead of itself?
We don't think so. We generally think that the US equities on a horizon of 6 months should continue to grind higher. The main thesis behind that continues to be one that we think earnings have troughed at the beginning of this year and should move higher in the US. And at the same time also we continue to see relatively elevated equity risk premia, so the excess return that investors can demand from equities over bonds.
And we also had reports of billionaire investor George Soros buying put options on the S&P 500, 4 million of them, up from about 2.1 million in first quarter. What does he know that we don't? Why is he so bearish on U.S. stocks?
Well, at the moment, I mean, that's, first of all, to start with, that's of course the beauty of the market, that you have very different opinions making up this market. We, of course, stand on the other side here of the spectrum. There's definitely some opinions around US equities that they might be in particular in a very short term for a correction. Now, we do, as I just mentioned, we do continue to think that on a 6 month period, US equities should grind higher due to the earnings growth improvements, the equity risk premium, and also, more generally speaking, the overall macroeconomic picture in the United States continues to be improving. You're seeing jobs growth at very elevated levels. You're seeing wage growth also, which is very steady. And at the same time also you continue to have relatively low but slightly increasing inflation figures, which should also support margins going forward.
Yeah, and we just got CPI for July, which showed no growth during that month. Now, in terms of sectors with stocks at these levels, where are the opportunities in your view?
So in terms of some of the opportunities that we're looking at, we have, for example, in the United States, overweight the consumer discretionary sector. Specifically, what we're seeing here is an improvement in the employment picture, rising wages that I just alluded to, that should support the consumer discretionary sector. Healthcare, particularly among the defensive sector, stands out in our view. You currently have very attractive valuations, high dividend yields, and in our view, the overall stance of some investors that are negative on the sector are overdone with regards to potential changes in drug price regulation. Other sectors that we like in the US specifically are the energy sector, which is more a value tilt that we currently have. Here specifically, we think that the oil prices, although they might stay under pressure in the immediate short term, should over a 6 to 12 month horizon continue to move higher as the market is starting to balance out. So those are some of the sectors that we are specifically liking in the United States.
Yeah, and energy stocks are up about 8% so far this year in the S&P 500, so pretty incredible stuff. All right, Maximilian Kunkel from UBS in Zurich, thank you for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.